that we are doing today. November 2019, question number 2. November 2019, question number 2. So have you been able to get that question, ladies and gentlemen? Anybody who has gotten the question, and if you have gotten that question, are you able to share that question on our WhatsApp groups, various WhatsApp groups? Simply go there and say, this is the question that you're doing. It's November 2019, question number 2. Published accounts, published accounts, published accounts, published accounts. Nobody's talking to me, so it'll be very hard for me to know whether we are really communicating, whether we are in sync. At least I have one person called Ryungu here who has been able to get the question, who has been able to get, even Mohammed, Ali Mohammed has been able to get the question. Right. So I can see like everybody has the question, so we need to go through it very fast. Now, ladies and gentlemen, why so many students are not able to understand and they get to pass and they get to score the highest marks in a published accounts? It's because so many students in this case here are not good with the IFRS and the IAS standards. Remember, in published accounts, it's not even about just the format. Well, within this format, the examiner would want to see whether you are able to apply IAS 2 inventories correctly. So the examiner will come, in the additional notes to the account, he will come and tell you, hey, you know what? We have inventory, which has been captured as 200,000 in the financial statements. So when you look at this inventory, for sure, you'll be able to see, for example, on the face of the balance sheet, statement of financial position, they have captured inventory at 200,000. And then they'll go ahead and tell you that during the year, there was some fair valuation of inventory items. We had somebody who went around the supermarket, and in this case here, he was able to give a different value, So remember, according to IAS 2, you must always look at how much did it cost you to acquire the inventory items. It cost me, for example, it cost me 200 to acquire these inventory items. I expect myself to sell this inventory at a profit. So I expect what we call net realizable value to always be higher, NRV, net realizable value to be always higher. However, in this case here, this gentleman who came to do valuation here, he went around the supermarket and he was able to get some obsolete items. So in this case here, the net realizable value out of, in this case here, the inventory items that were in the shelves was worth 150. It cost us 200, but now it's valued at 150. So in this case here, then according to published accounts, what amount should we hold this inventory at? Should we hold this inventory at 200 or at 150? Somebody talk to me. Should we hold this inventory at 200 or at 150? Somebody talk to me. According to IAS 2 inventory. Before I start doing this question, I want to show you why so many students are good in financial reporting, but they'll still keep on getting fails. You get somebody who has failed for 3 times or even 4 times. Just imagine what a loss. What a loss. What a loss. So in this case here, Kimonge is telling me, hey, Mwalimu, you should hold the inventory items at the lower. Remember, that is what the standard tells us. That you always look at the cost of the inventory versus the net realizable value, and then you always take the lower. And then remember, at this juncture, you'll be required to know how to calculate a net realizable value. How do we calculate net realizable value? Remember, to get net realizable value, of course, you'll be given market value. Market value, that if you want to sell these things today, the market value is, for example, 300. The market value is 300. But again, remember that for you to be able to take these items to the market, there are those costs to sell. For example, you may be forced to acquire an agent who will be able to dispose these goods for you quite fast. You may be forced, in this case, to advertise them. So anytime they want you to get a net realizable value, you'll always take the fair value. Fair value is also known as market value. How much are these things being valued at the market at the moment? Maybe 300. Minus now the costs to sell. That's how we get net realizable value. Ladies and gentlemen, it will be very important for us to master the IFRSs, to master the IASs, which are given to us by the examiner if we are to pass in this great paper called Financial Reporting and What Year Analysis. So when, for example, we talk about IFRS 3, someone will be able to tell you that IFRS 3 is all about business combinations. IFRS 10 is all about what year group consolidation. We have IAS 28, investments in associates and what year joint ventures. We have IFRS 9, financial instruments. We have IFRS 15, for example, revenue with contracted what year customers. Revenue with contracted customers. And remember, it is not just these IFRSs alone. Also, the international public sector accounting standards are a key if we are to pass this paper with just one kick, International public sector accounting standards. So for example, if you look at your past papers, these guys would always want you to differentiate between IPSAS 9 and the IPSAS 23. IPSAS 9 and IPSAS 23. Is there somebody who will be able to know how we normally differentiate the two? IPSAS 9 and IPSAS 23. Before we look at this November 2019, question number two, and then of course we shall have to discuss how Mwalimu will come in to be doing this kind of sessions for you often, especially for the students who are in our paid up groups. Remember, we are RCM Online College. We charge Kenya shillings 4,800 per paper. And once you pay us this 4,800 Kenya shillings per paper, we shall be able to give you access to the notes in our learning management system. We shall be able to give you access to videos, like last semester videos, all of them. So that should you want to read ahead of the teacher, then we'll be able to do that without really any limitations. And then, of course, we shall be able to give you access to our Zoom classes like that. So, of course, if you're interested in joining us, for you to be able to also benefit from what Mwalimu discusses here often, please, you need to call us not tomorrow, but today, 0793 555 000, 0793 555 000. So IPSAS 9 and IPSAS 23. Is there somebody who knows the difference? IPSAS 9 and IPSAS. If you look at your syllabus, you must be seeing these two IPSAS there. IPSAS, International Public Sector Accounting Standards. Remember, these are those standards that are being used by the government entities. We have NGOs for preparing their financial statements. So basically, these are those entities that are not for profit. They don't exist to pursue profitability. All right. In most cases, they depend on donations and well-wishers to survive. They depend on taxes, for example, for their survival. So if, for example, you look at a great organization like the Catholic Church is doing very many great things outside here. So Catholic Church, if you look at their revenue, Catholic Church, their revenue is divided into two. We have revenue that comes from non-exchange. And we have revenue that comes from what we call exchange transactions. So in talk of exchange transactions, ladies and gentlemen, these are those transactions that the church enters into, where they are able to provide services or goods. And then for the services or goods they provide, they are paid by the people who are going to benefit. So for example, Catholic has got so many schools, so many hospitals. So in their hospitals, of course, they are offering services. They're treating people. And in the process, the people are being treated, of course, are paying fees. All right. So you can see the fees that that patient gives, they are not donating. They are not donating that fees. They have gotten, in this case, here, some service. Then that revenue coming from all those patients treated by Catholic hospitals, the fees received by Catholic from all the students they are training, ladies and gentlemen, will be accounted for under what we call IPSAS 9. IPSAS 9. So IPSAS 9 is International Public Sector Accounting Standard number 9, which basically tells us that we have revenue from what we call exchange transactions. We are exchanging something here. We are exchanging something here. And then we have IPSAS number 23, which basically will be taking care of the revenue that we receive as a church, for example, from non-exchange. We are not giving ourselves anything in return. We are only getting money, but we're not giving any goods. We're not giving any services in return. So let's be very honest with each other here. So for example, when I go to my church and tithe, will I get anything in return for the tithe that I've given to my pastor? Will I get anything for the tithe that I've given to my pastor? Somebody talk to me. Somebody talk to me. Somebody talk to me. Will I be able to get anything for the tithe? No, no, no. So any donations, ladies and gentlemen. So for example, when you give taxes to the government, is there any direct service that you can go and in this case here tell the government, hey, I've given you this amount of tax, you must give me an equivalent of this service? No, no. Of course, someone will tell you that, the government is providing roads, but you see, you can't go and even make a bargain. You say, as per this region, we have contributed this kind of tax, then give us this amount of what, yes, sir? Even if you're shareholders. Tax, like now we've been paying affordable housing levy. Is there anybody who has gotten a house from the government up to date? Is there anybody? Perhaps you guys could be very lucky. Is there anybody who has gotten any kind of a form of a house from the government? No, no. So meaning that is revenue they are receiving out of what here non-exchange. And that is why IPSAS is very, very categorical. They want us to be splitting the entire revenue that we get into exchange transactions revenue and the non-exchange transactions revenue. So if it's a school, all right? If it's, for example, like United Nations, United Nations also, they do quite a lot. These guys here do a lot of research. They have publications that they sell. So they have revenue from exchange transactions. And then, of course, we have member states giving them lots of what here donations. So they would want any not-for-profit organization to be categorizing their revenues into two: revenue from exchange and revenue from non-exchange. Now, let me ask you questions, ladies and gentlemen, so that, we are at the same wavelength in terms of knowledge, all right? Why do you think is the International Public Sector Accounting Standards Board trying to compel organizations to categorize their revenues in that manner? To categorize their revenues in that manner. Why do you think is the IPSAS board? Why do you think is the IPSAS board forcing organizations here to move in that way? Move in that way, move in that way. Let me give you the reason. The reason is this, ladies and gentlemen. We know ultimately that most of these organizations outside that are saying that they are not for profit, for sure they are doing business, lots of business, and they're denying the government their fair share of what your taxes. So in this case here, the IPSAS board is able to look far, and it is able to know that most of these countries in the near future will start demanding taxes from these churches. And the tax that they would want to demand is a tax over all those transactions that they are doing that are what year revenue generating. that are revenue generating. So they would want, in this case here, for example, if it's Catholic Church in the next, say, 1 or 2 years, actually most governments have already started asking globally. Most of these like churches, these big churches, United Nations, that you guys, there is some component of your revenue which you are able to see that, you're doing business. And out of that segment of revenue, business revenue, why don't you pay us taxes? All right. Now, is there anybody who is able to see any question regarding this IPSAS 9 or IPSAS 23 from your past papers as a theory question? Is anybody who is able to see, for example, any question from your past papers when you peruse through your past papers, a question asking you to differentiate between IPSAS 9 and IPSAS 23? Or a question asking you, what is revenue from exchange transactions? What is revenue from non-exchange transactions? Anybody who is able to see that? Anybody who is able to see that kind of a question anywhere? I want to help you. I would want you guys to pass this paper with one kick. We are ninjas, remember. Ninjas, they don't do 2 or 3 kicks to put down the opponent. No, it's one kick. We sweep you down. If you move around your past papers, you should be able to really see something of that nature. As I wait for you guys to identify that type of questions, those type of questions, then I would want us to look at our famous what year? Published accounts, and we're looking at November 2019 question number 2. November 2019 question number 2. November 2019 question number who? Question number 2. Question number 2. November 2019, question number 2. I'm recording this, Veronica. Don't worry, I'm recording it. Don't worry. So we have here November 2019. November 2019, this is very, very important for us to understand the concept of published accounts. The concept of published accounts is very, very important. If you want to pass this paper, you must understand how to do published accounts. So we are told there, the following trial balance has been extracted from the accounting records of Skytex Limited as at 30th September 2019. So I can see the TB there. Additional information I'll not even read there at all. I won't read anything there at all. I'll go straight away with the requirement. The requirement there, required, they want us to give them a statement of profit or loss for the year ended 30th September 2019. That's what I'll do first. So I'll go straight away without reading the additional information. You should never start doing these questions by tackling workings. No. Whenever you see a trial balance and they're asking you to do final accounts, go ahead and do those final accounts as per the trial balance. As per the trial balance. Don't, in this case, just start by looking at additional information because you're going to waste your time there. And there are things yet which do not need any changes. There are things which don't need any changes. So in this case here, we are looking at the income statement. Income statement. So the income statement for which period? For the period ending. For which period? For the period ending. For the period ending. For the period ending. For the period ending. 30th September 2019. 30th September 2019. 30th September 2019. All right. Someone should be able to share the question paper even here. That will be great. All right. So please, for the number of years I've been involved, here in this teaching and, of course, doing other things, ladies and gentlemen, it will be very important for us to get this format here. The first thing, I will continue after you guys share the question paper. Please share the question paper here. Okay, so I hope now everybody has access to that paper. So the first thing you do, ladies and gentlemen, here there are very many free marks. There are very many free marks. There are many free marks here which don't need any adjustments. So if they want me to do an income statement, I know how an income statement looks like. So I know I will have to start with revenue. So we have revenue there. Is there anybody who is able to see the revenue amount is how much? Revenue amount is how much? Somebody please help me. I want to help you understand how to do these things. From the trial balance, is there anybody who is able to see the revenue amount? 216,000. Thank you very much. Remember, this is going to be just our working. So we have here 216,000. Thank you very much. So we have the cost of sales. Cost of sales from the trial balance. Are you able to see the cost of sales? Is there anybody who is able to see the cost of sales from the trial balance? Cost of sales from the trial balance, 108,500, 108,500, 108,500. So of course I know I will need some space for gross profit. I will need some space for gross profit. I will need some space for gross profit. And then we have other incomes. Other incomes, is there somebody who is able to see investment income? Is there anybody who is able to see any investment income? Anybody who is able to see any investment income, please give us an amount from your trial balance. If you're able to see investment income, please give us an amount there. If it's not there, just leave it like that. Investment income, somebody is telling me it is supposed to be 600. From the trial balance given, somebody has been able to see the investment income as what here? As 600. As 600. Investment income as 600. So of course you must leave like 2 lines here because the other incomes will spring up. Other incomes will spring up. When you're reading the additional notes to the account, we shall get other incomes here. So please leave 2 lines. Leave 2 lines. Leave 2 lines here. Leave 2 lines here. Leave 2 lines. Leave 2 lines. Leave 2 lines. Leave 2 lines. Ladies and gentlemen, after that, then we shall be able to go to the expenses side. So yourself, you've been able to leave 2 lines there. So we have the expenses side. So the expenses side, expenses, of course, you know what published accounts want us to capture. So we know under the expenses, the published accounts would want us to capture what we call administration expenses, selling and distribution, like that. So we have here admin expenses. Admin expenses. We have here selling and who? Selling and distribution. Then we have what we call finance cost. We have what we call the finance cost. I hope they're able to see this thing somehow. So of course, once you get the finance cost, then we will be able to get what we call profit before what? Profit before tax, and then tax becomes the last thing. All right. So in this case here, once you get this finance cost, we shall have here profit before tax, and then taxation is normally the last one here. Taxation is the last one there. So please let me know once you are able to write this up to there. Let me know once you are able to write up to there. Put your thumbs up. And then I'll be able to guide you very well what you need to do very fast. Profit before tax and then tax. All right. Thank you very much. Now, ladies and gentlemen, once you reach there, really, you are a very, very good student. You don't even have to post the figures. You just wanted to do like a general structure, a skeleton. And then now you go to additional information number 1. Go to additional information number 1. Let's go to additional information number 1. So additional information number 1, we are told there, Skytex Limited entered into a contract with a customer where performance obligation is satisfied over time. That's IFRS 15. The total contract price is 45 million. So I'll read this as 45,000 because my figures up there are in shillings thousands. With the total expected contract cost of 25,000. Progress towards completion was measured at 50%. On 30th September 2018, that's last year, and the ended 30th September 2018, but no entries have been made for the year ended 30th September 2019. Ladies and gentlemen, please listen. Progress towards completion was measured at 50% on 30th September 2018. And at 80% on 30th September 2019, our year is 30th September 2019. You can see up to 2018, we have done 50%. Up to 2019, now we have done 80%. So it means that in this year alone, we did what percentage somebody is able to follow. In this year alone, out of this contract, what percentage have we been able to do? Up to the end of last year, 50%. Up to the end of this year, 80%. So in this case here, what is that increase in work in progress? 30%, yes, 30%. So then the 30% of the contract revenue has to be recognized in 2019. So 30%. So 30% of this 45,000, because my figures here in terms of shillings thousands. So 30% of 45,000 is what here, somebody? 30% of the 45,000. 30% of the 45,000 is what here, somebody? 30%, because 30% has been done. 30% has been done in this current year. In this current year. 30% has been done in this current year. 30% has been done in this current year. So that is 13,500. 13,500. So that is 13,500. So then somebody tell me, this is an amount which has not yet been accounted for. It is an amount that you would want to bring into your financial statements. It's a revenue. So it means that in this revenue here, I need to come and introduce here this amount, 13,500. And please don't take your calculator yet, because in the subsequent additional information, you'll be able to read areas about what here, other things which will be able to give us other revenues. So 13,500 is a new revenue item. It's a new revenue line that I have to bring here. Where else do you think am I going to take? Remember, this 13,500 has not yet been paid to you. It has not yet been paid to you. So where else? Because whenever I'm doing this thing, I must always think about double entry. Otherwise, things will not balance. So where else will I take this 13,500? Somebody talk to me this afternoon. Talk to me this afternoon, somebody. Very good words. This will go under trade receivables. And that is why whenever I'm doing this trial balance coming with the final accounts, I'll always do the pro forma. Pro forma for the income statement and pro forma for the statement of financial what here position. Statement of financial position pro forma. I wish I had it here. If I had it here, my space is quite little. If I had it here, I would have straight away recognized that 13,500 under trade receivables, trade and other receivables. I would have taken the figure in the TB there and added 13,500 and added 13,500 because you know these amounts, ladies and gentlemen, revenue here. I've recognized it, yes, but I have to accrue it. This amount has not yet been paid. Has not yet been paid. So up to here, ladies and gentlemen, my great students, are we together? Up to here, are we together really? Are we together really? Are we together? Up to here, are we together somehow? Somehow, please talk to me. All right, all right, all right, all right. I'm only getting 3 yeses there. 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 How about the other students? At least I can see Esther's come on board and told me, Mwalimu, at least that one I'm able to understand. So that's note number 1. I've been able to read it very well. I've been able to read it very well, and I've understood it. I've understood it. I've understood it. I've understood it. Let's go to note number 2. Let's go to note number 2. Let's go to note number 2 is very, very interesting. Before you go to note number 2, if you still read note number 1, we've been able to recognize that revenue. There is also a cost. There is a cost to this contracted customer. 45 million is revenue. How about the cost? Is there somebody who is able to see the cost there? Is there somebody who is able to see the cost there? Is there somebody who is able to see the cost there? So the cost is what amount? 25 million. There is a cost there. Read the past papers very well. There is a cost bit of it. So cost, so it will be 30% of the cost, which is 25,000. Remember our figures here in terms of shillings thousands. When figures are in form of shillings thousands, so also in the notes to your accounts, you must keep on striking those 3 zeros. So you don't read it as 25 million. You read it as 25,000. So then can somebody tell me what is 30%? You know 30% is what was done this year. What is 30% of 25,000? What is 30% of 25,000? It is 7,500. So this 7,500, I have to look for 2 areas to slot them. I have to look for 2 areas. I have to look for 2 areas to slot these 7,500. So where am I going to put this 7,500? Can someone tell me? Where am I going to put this 7,500? It's a cost of doing business, isn't it? It's a cost of sale. It's a cost of sale. It's a cost of sale. So in this case here, you're right. So in this case here, plus what here, somebody in your cost of sales, mention there 7,000 what here? 7,500. Not expense. You cannot expense in this case here. You know, this is a business to the company. It's a business to the company. It's a cost of selling. It's a cost of sale. All right. And remember, these particular people, you also haven't paid them. You haven't paid them. You haven't paid them. So this at the end of the day must be what here are payable in your balance sheet. So the 7,500 will go to the cost of sales and to your payables in the balance sheet. So up to there, ladies and gentlemen, are we really together? I'm only left with 10 minutes. I'm only left with 10 minutes. And of course, I would want to remind you guys that we're giving you this session from RCM Online College. And I would really want all of you to become my students. I'm really requesting to have all of you being my students, and then I'll be able to get a very good structure of assisting all of you. Currently, we have about 150 students doing FR with us, but we believe we should be able to get even better. We should be able to get even better. We should be able to get even better. So in this case, ladies and gentlemen, if you are interested in paying, of course, fees to us, please call this number, 0793 555 000. 0793 555 000 is our school's phone number. 0793 555 000. All right. So let's look at note number 2. We can see that time is not really nice to us, but we shall overcome. So note number 2, we are told there, on 1st April 2019, Skytex Limited was notified that an ex-employee had initiated court proceedings against them for unfair termination. Legal advice was that there was an 80% chance that Skytex Limited would lose the case and would be required to pay an estimated amount of 5.06 million in damages on 1st April 2020. 1st April 2020 is a whole year after our financial reporting date. A whole year. All right. So when they give us a very high probability that this case, we shall lose it. 80% is a very high probability. So it means that this now is a contingent liability. It's a contingent liability. All right. Anytime you have what we call a high probability, more than 50% probability of occurrence, we say that the event is highly probable from the word probability. Then this one here, because the liability which is dependent on this legal case. Of course, not 100%. We haven't yet lost it, but we have a very high chance of losing it. There is a contingent liability, and if it's a contingent liability, you must provide for it in the notes to the not notes, but you must provide for it in your financial statements. So a provision is needed here. If the probability was very low, less than 50% probability, then I would have provided the item in the notes, but I would not have provided its any figure to it on the financial statements. But you see, this is 80% probability of us losing the case against our ex-employee. So we'll be told to pay this guy. So whenever you're told to pay the guy, so there is a contingent liability. And if it's a contingent liability, then you need to provide, you need to do a provision. And the provision is always present value. The provision is always present value. The provision is always the present value. The present value. The provision is always the present value. The provision is always the present value. So in this case here then, the present value will be equal to who here? It will be equal to 5060 because that is 5.06 million. So if I strike off the 3 zeros, it will be 5060. But you see 5060 is the end of the year. So we need to discount this. So the provision here will be discounted. So give us the present value of this PV. So times the PV. So has this examiner given me the present value interest factor? Oh, yes, he has done that. He has given me the present value interest factor. He has given me the present value interest factor down there. Last paragraph. Skytex Limited cost of capital is 10% per annum, and the discount factor is 10% for 1 year. And we are doing this provision to pay. We are planning to pay after exactly 1 year. So I shall take this times 0.9091 times, so it will be 5060 times 0.9091. Is there somebody who is able to give me this figure? Is there somebody who is able to give me this figure? Is there somebody who is able to give me this figure? Is there somebody who is able to give? Thank you very much, Scholastica. Great. Is there somebody who is able to give me this figure? Patapotea. 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 Is there somebody who is able to give me this figure? So the provision then, the provision, first of all, give me the figure. First of all, give me the figure. First of all, give me the figure. Remember, this is an amount you're supposed to be paying in 2020. But because you would want to prepare for it, as early as 2019, we must get the present value. Present value. We must get the present value. We must provide that particular loss today. Loss today. So how much are we getting here, somebody? 4,600, isn't it? So in this case here, we are getting 4,000. So we must provide, in this case here, 4,600 in 2019. And when you read down their second paragraph, you'll be able to see that these people had already provided something. We are told in paragraph number 2, based on this advice, Skytex Limited recorded a provision of 4,000 on 1st April 2019 and has made no further adjustment. So already 4,000 has been provided for. 4,000 has been provided for. So in this case here, the additional provision will be 4,600 minus what has already been provided for, which gives us what, somewhere there, 600. So 600 is the additional provision, Please read there very well. Read there very well. The provision was recorded in administrative expenses and in trade and other payables. So it means that if you are a good student, you should be able to know that this 600 will be added to your administration costs and to your trade and other payables in the balance sheet. Here I'm looking at the income statement. I have administrative expenses. In the trial balance there, how much are you able to see as administrative expenses in your trial balance? In your trial balance, how much are you able to see as the administrative expenses? In your trial balance, is there somebody who is able to see admin expenses? Admin expenses in your trial balance, admin expense in ngapi? In your trial balance, 44,000, isn't it? That's 44,000. And then I'm going to do, in this case here, an additional what here? An additional 600 there. An additional 600 there. So I'm so sure when I do this for the very first time, students get confused. But once I do the second question, all of us will be very, very comfortable. All of us will be very, very comfortable. Now, ladies and gentlemen, remember, whenever you get this present value, like now you have gotten present value of 4,600 here. What happens, it is always assumed like now you've been given that amount as a loan, because I mean, you'll need to start looking for this money in advance. You don't have it. So that is why you must come and look at the interest. You must look for the interest in this. And the interest, of course, ladies and gentlemen, in this case here will be that 4,600 times the rate of the cost of capital given there, times the number you must time per rate. Whenever you get present value, this could be out of commissioning some kind of assets or decommissioning, all right? Whenever you have a present value, you must always think about what we call interest on that amount, what we also call unwinding or interest unwound. All right. I'll be bringing up this concept later on in a better way, in a way that you guys will be able to do what to understand it very well. But otherwise, it has been a pleasure hosting you guys today over lunch hour. I want to believe you may not have understood so much, but at least there is something you're going home with. And of course, without forgetting the fact that I would want all of you to become students of what here, RCM Online College, where we charge 4,800 Kenya shillings per paper for videos, for Zoom classes, and for notes. Once you join us, you'll be able to see why so many people are making a decision to join RCM College. Otherwise, for now, it's bye-bye. My students who are watching me from Facebook, I expect you guys to share this particular what here link to various groups, Otherwise, thank you very much and bye-bye. Thank you very much. Bye-bye. Bye-bye. Great. So shall be able to get yes time to do the entire question later. This was just but a teaser. Thank you and bye.